Yes, guys, I can't believe this, but I've just checked on this trade that I got stopped out on uh, because of spread, and it's literally hit TP1, which was a 5-1, and it's pushing towards almost hitting TP2, which is a almost a 10-1. I don't know how I feel about this right now. I'm not gonna lie. I feel, oh man, I don't know. Like in one hand, I'm like, hello, Katzen. On one hand, I'm like, look at this great trade that I spotted and like everything made sense and I executed. On the other hand, I'm like, oh man, I'm just like, fucking what the hell? I guess part of me has to realize that um, a better, more flexible stop loss is important. Um, like I wanted to get I always want to get tight stop losses when I'm in, because I want to get like the best risk to reward. So like I added zero point 0.5 above this high, but the problem is spread. Sometimes spread is zero point 0.5, so I'm actually giving the trade no room to breathe. So straight away after seeing that, I'm gonna change my rules. I can't. I actually can't believe. I can't believe I've just seen that. So I'm gonna change that to stop loss is 1 pip around the entry candle. Um, which would have been there. The reason my stop loss was there is because my entry was supposed to be there. But yeah, can't believe. I honestly can't believe that. And this EU trade has been like an absolute monster. That would have hit like nicely a 7-1 and a 5-1. So uh, this one actually encountered like not much drawdown. Um, but yeah, basically what I want to do, the reason I just logged on anyway, is to really define my rules so I can do a proper back test, because I've noticed that as much as I love this strategy and I love the idea of it, I don't have a um, I don't have a clear enough strategy to say, yeah, this is this and this is that. I'm good at I'm good at reading price action now. I'm good at anticipating where things are gonna go, and like I know that price has to sweep liquidity before it takes stuff, and like getting the idea of highs and lows and all that kind of shit. I genuinely can't believe this. Like this is like, but yeah. So if I was to analyze this trade, then like I've said, I've done my 4 hour and I've got my bias. Then drop into the 15. I'm waiting for a 15-minute break, a 15-minute order block. So it's mark out the 15-minute order blocks um, with liquidity, entries every in between the thingies. Now liquidity. So here, this was interesting to me. So initially, if I was to take away these, I might as well take away that because it's just painful looking at that. I'm not gonna lie. So the to be honest, now looking at this, that should have been the entry, because let me explain my liquidity rules. So I have, this is first liquidity, old liquidity. This is what I call old liquidity. Um, this is liquidity that's gonna naturally pull price back towards it. This is what I call mid liquidity. So this was liquidity. Basically, old liquidity is liquidity that's formed during the push out. So during this move that pushes out, that's old liquidity. Mid liquidity is these are all names that I've just invented anyway. This is mid liquidity. This liquidity here is liquidity like inducement. It's like pull back but near to the entry, a push away, and then you have to wait for this to be taken and swept. And then I also have new liquidity, which is liquidity. So I think about it like this. I think about this liquidity here. When this gets taken, this is taking out the people who are still in this move, thinking that we're going lower. They're still in this move and their stop losses are there. This liquidity, when it gets taken, is the people that have been induced to jump in early, thinking that we're going to take this low. And then this liquidity here is the people who have got in, like me, who've got in and wrapped their stop losses around here just to be swept and taken and then continued lower. These two liquidities can be disrespected with the candle wise, like they're not part of the structure, but this liquidity shouldn't be disrespected candle wise. So for example here, that's exactly, to be honest, yeah, I don't know, maybe I don't know, that's a tough one to say that's been disrespected because it's like 0.1 pip above, but that's basically what I'm talking about. Like this is the new liquidity. So old liquidity gets swept, mid liquidity gets built, gets swept, and then new liquidity gets taken. My thing was, I thought that this was new liquidity here. I thought that this small inducement here to take, and then look, we pushed right back down. I thought that's what that was. But like I'm saying, I guess I need some rules for these types of liquidities. Like the new liquidity needs to respect the structure. Like, so for example there, the thing is with EU is we didn't get all of those things. Here's old liquidity, here's mid liquidity, and then we didn't actually get new liquidity, but we tapped in perfectly to this 5-minute order block. But look here, actually there's the difference. Okay, let me just analyze this, right? So what my theory needs to be is that new liquidity needs to be respected at least on the 5-minute chart, right? So here's the range here, there's the candle, and there's the close. So we've still respected this the new liquidity, this small range, and basically you can see that on the 5. Look, so we've come up within the first 5-minute candle. Look, 5, there's 6, and the third candle has already come back and said, all right, I'm respecting that, and then we haven't broke above this area here. So that was where I should have been in on this trade. The difference is with GU, we did do that. We broke above and we slammed lower. But if you look, within this 15-minute candle here, look, it's happened exactly the same time, 50 quarter past. Within that candle there, we've actually closed above. So that, where are we looking? Here, yeah, here. Is it? Where are we looking here? Yeah, it would be here, innit? So we've actually closed above that. So it's not, you can't count that as a sweep. It hasn't swept anything inside. So technically we're waiting for that. Now, like I've written in here, new liquidity needs to be a consolidation, a small consolidation near the entry or inside of the order block. So here, look, consolidation near the entry, sweep, gone, respect. The sweep of the consolidation must not disrespect Should I? Maybe I put disrespect the market structure of the consolidation. Meaning it must sweep the high / low and return below before within 5 minutes. So that's my. So that with that I could have avoided that loss. With that rule, I could have avoided that loss because we've swept it, but we've stayed above it. So we haven't truly swept it. This is just a new high. That's the sweep here. And there again, look, if we talk about 5 minute structure, look, swept it, respected it, and then we haven't experienced drawdown ever since there. So as painful as that is to watch, I'm okay with it. And also, I've got to be realistic with this stop loss. As much as I really want to have a tight stop loss so I get a better risk to reward, like if I'm right in the trade, if my analysis is right in the trade, it doesn't matter. Like I could have entered on I could have entered on the 5 minute chart here. Look, 2.5, 3.5. I could have still got a 5-1 easily. But if my analysis of the trade is right, it doesn't matter how, like, getting the most perfect tight stop loss. But yeah, that's going to be a new rule then. It has to be 1 pip above. It has to be. There, it's not even. I still would have had 2.5 pips. Would have had that. Yeah, as painful as this is to watch, I can't be mad at it. So, all entries must have tapped into a 5 minute or 1 minute order block. Entries outside of an order block are not allowed. All entries must have a strong wick. Do you know what? I'm changing this. All entries must wick past but not break structure. On 5 minute or 1 minute is even better. So that allows me to say the engulfing candle entry model, because that is technically our 5 minute. There's our consolidation. There's our sweep, return. There's our entry right there. Boom. This candle here. And I want to see with these engulfing candles, I want to see them close the gap, and then I want to see this indecision candle right there. Same thing happened on GU, even though, like I'm saying, it was the wrong place to enter. If I'm having such a tight stop loss, that is a good place to enter, but I needed more breathing room on that stop loss. But my point is, push away, almost double the size of that candle, close the gap, and then I want to see a little bit of indecision there. Really, really big shame, man. I could have been up. On this, but there's no room for cut-offs. That's gonna be my new motto. There's no room for cut-offs. But yeah, okay. So this is what we're gonna start trading. So I think, to be honest, I don't really care for 1 minute order blocks without having. I've kind of written that anyway, haven't I? These rules clear enough. Bias. And then I need like POIs. Refine. Don't refine 15 minutes to 1 minute. You know what I mean? So we're refining them down by one. I like that rule actually, that's nice. Old liquidity. So sometimes two can be the same. This trade must be in line with at least one higher time frame thingy. So yeah, that's in line with the 15-minute structure. Counter trend moves must only be taken if price hasn't come back to discount. That's why I didn't take any buys looking at this. But if you actually do look at that, it's got everything we need. Look at the same time. So I don't know what time this tapped in, but we've got an order block there. We've got liquidity here. With these 5 minutes, they're not like they don't have to have this kind of old liquidity here. But then we've got mid liquidity here, which is the pullback inducing, and then here we've got the new liquidity. So we've done triple threat. Let's see if we swept and respected. Yeah, we did. Look, so 50, 51, 52, 53, 54, 55, and we're out, and we're back above. Only thing I don't like about that is that we didn't fully tap into this 1 minute order block. Also, this was completely counter trend, so there's no real backing for that to go where we thought it was gonna go. Obviously, price should have come to there, which it did, but the thing is, there's no guarantee that that's gonna happen. But yeah, there we go. All entries must be tapped into at least a 5 or a 1. All entries must be a wick past but not break the structure on 5 minute or 1 minute is even better. Stop loss is minimum 1 pip around the entry candle. Beautiful. So we're still going fixed risk reward, multiple of 5 to 1. I need to do my back test. Be patient. I was really patient today. Focus on the process, not the outcome. I did that today because I'm not too worried about that loss. I know I've performed well, and be present. Just take one trade. Just because one trade didn't go doesn't mean the next one's gonna. But yeah, cool. I really am feeling more confident. I feel like I'm getting a lot smarter at reading price action. I just need that extra little bit now. Just being like, to be honest, I need that extra bit, and that extra bit is back testing this strategy, because what I have right now is a really, really good strategy. It can be played on any. It can be used on any. It can be used on anything. Look, old liquidity, new liquidity. See if we got any. No, old liquidity, mid liquidity. Let's see if we got any new liquidity in that. Small little 10 past low. Small consolidation, break below, sweep above. Doesn't really count, does it? But either way, what I'm trying to say is I'm confident with this. I'm confident with this strategy. I'm gonna put if old liquidity. I'm gonna put if old liquidity isn't present, expect the high of the range / order block to be swept. Just like that, look. No old liquidity there. We've got new liquidity. No old liquidity, so we swept that, just about swept it, and then we pushed lower. But yeah, market structure, like all of this stuff, it just makes sense. It really just makes sense to me. But liquidity, new liquidity, boom, sweep and go. That's it. It's just this is the way the market moves, and I've realised that it's these manipulations that give me the confidence. It's just like, okay, where are we getting? Who's getting manipulated? Who's losing? So you know, so they can start taking them out. I'm interested in what that looks like on a lower time frame. I feel like I might need to define what a consolidation is, because I can't really say that that's a consolidation. Like realistically, that's not a consolidation. A consolidation needs to be 1, 2, 3, 4, at least 5 candles maybe that just have no intention of going where they want to go. That's a consolidation. That's a consolidation. 1, 2, 3, 4, 5, 6, 7, 8 candles. That's a consolidation, I'd say, like this little range here. This is 1, 2, 3, 4, 5, 6, 7, 8 candles again. Wow, so we're seeing consolidations. All of this is, but I'm just trying to see like the smallest one that I'd be like, okay, that's a consolidation. This is 1, 2, 3, 4, 5, 6, 7, and then we broke out on the 8th. So we're looking at about 7 1-minute candles. In fact, why am I going through it when we just literally had one on here? Where was the entry again? Ah, hang on. Where were we? Oh, up here. Up here. So, how many 1-minute candles did we have that got swept at 11 o'clock? Because that was the perfect consolidation. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 7 candles. Even this is 1, 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. Would I say 6? This is 1. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 candles. It's a bit kind of not one at the same time, isn't it? 1, 2. Around 6. Sweep of consolidation. Okay. Maybe I need like a key. So like terminology key. Terminology. I don't know how you spell terminology key. So. Oh shit. Okay. Order block. We're defining that as the last down candle before a break of structure, the last opposing candle that led to a break of structure. We know what Fair Value Gap is. Okay, sweep. A sweep must be defined as a candle wick breaking a structure point, not a body, not a candle body. Consolidation. I'm gonna put okay, what if I was looking on a 5 minute for consolidations? Where would we say, look, there's 1, 2, 3, 4, 5, more than thingy. Well, little consolidation, 1, 2, 3, 4, 5. Yeah, 5 candles. 1, 2. Nah, it's kind of in it as well though. 1, 2, 3, 4, 5, 6, 7, 8, and then we broke above on the 8th. One, two, three, 4. That's not a consolidation. One, two, three, 4. 1, 2, 3, 4, 5, 6, and then we break. So maybe 6. Here's a consolidation. 1, 2, 3, 4, 5. I'm gonna put 5. 5 or more candles trapped within a range with no bodies breaking structure higher or lower. How do you spell bodies then? So does that count as to what we saw today at 11? Here. Yeah, look, all the bodies are trapped within the range. All the bodies are trapped within the range. 1, 2, 3, 4, 5. More than 5 candles. There's not really one because there the bodies are breaking out. Here's one, look, 1, 2, 3, 4, 5. Small consolidation, but it's still one. 1, 2, 3, 4. Yeah, that, okay, 4, I guess 4's too little then. Here's 1, 1, or 1, 2, 3. From there to there, 1, 2, 3, 4, 5, 6. Yeah. Alright, 5 to 6. 5/6 or more. 5/6 or more candles trapped within a range with no bodies breaking structure higher or lower. A sweep is a candle wick breaking a structure point, not a candle body. Any more terminology that we need? I'd say draw on liquidity. Draw on liquidity. Maybe identifying highs or lows that should be broken in context with seeing which PD arrays are being respected. Both must agree. That's how you get your joint liquidity, innit? Anything else? Inducement. / reactions near the higher time frame order block. Inducement. So we have inducement. Inducement is going to be when price reacts. Price either makes a small reversal, reservation, reversal, or a consolidation, or a higher time frame consolidation near / near to an order block. Inducing people to enter early. Nice. Alright, we're looking good. We are looking good. Let's just do a little line there. I feel like I've pretty much made this like as mechanical as I can, really. Like, really defining them sweeps has been helpful because you know it's more about it's more about what am I trying to say? It's more about knowing the entry. It's just like, okay, everything else is lined up. You're in a high time frame PY, you took liquidity, the timing is right, la la la. It's just like, okay, is this candle saying to me to get in? Because I need to define what these candles are saying to me. For example, that. Alright, cool. We got high time, got PY there. that would be the old liquidity there, because we've got a second POI. That would be our new liquidity, and then when we see that get taken, depending obviously where we are, like liquidity wise, I don't know how high probability that is because we've already swept the low. So for all intents and purposes, we should potentially be going higher. So to see all that, and then all of these are making the same high, then we sweep that, break above it, and then your entry would be at closing that. So the entry needs to be at the close of the fair value gap that creates after the sweep. So it needs to be there. Don't gas yourself, Ollie. You already know this is going to win, so don't fucking blow your own horn. But like that. Oh, wow, I just took a winner. What a winner. I'm so sick at trading. You know? Seeing that, we've got a lot of consolidation there. We leave behind a fair value gap, and the entry's right there. And the stop loss goes above the high of the sweat. 1 pip around the high slash low of the candle that sweeps. Right, I'm done now. I'll upload this. Peace, and there's no room for cut-offs.